Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and we're starting off with the big news of the day. And this more or less triggered the sell wave that came into the market today, combined with it being options expiration on this Friday, February 21st. United Healthcare stock got pummeled even before the opening on a report that the Department of Justice is probing its Medicare billing practices. Now, this is a fraud investigation, so this could play out to the downside in the general market because United Health represents about 7% of the overall holdings in the Dow Jones Industrial Average, the Dow 30. So this could continue to push prices lower, and that's why I'm starting off with this news. Now, speaking of fraud, there is the Doge wave coming through. And this is new to some of you. Maybe it's not so new to others, but the Department of Government Efficiency has discovered that $4.7 trillion of Treasury payments were missing their critical code. So it makes that money virtually impossible to trace. And I think we're going to see a lot more of this happening across all departments of government, and that includes the Social Security Administration. If you look here, this was a report that came out through Doge again, showing the incredible number of more or less dead people that are still collecting Social Security. Nearly 21 million people are still considered to be alive, but as we know from the numbers down below, people don't live to 130, 140, 160 years old. So as a result of this, the head of the Social Security Administration quit. I think we're going to see a lot more of this in the months ahead. And in fact, the reason I say that is because if you look at the top Google searches for mid-February here, you're going to see this is pretty amazing. It just basically tells you what's going on here. Offshore bank accounts. What acts are treason, criminal defense attorneys, and we're seeing lawyers filing right now for protection for certain folks regarding fraud. I'm not going to get into that. Maybe I'll talk about that next week. I'm trying to save some time so we can get right to the markets here. But if you look at the economic indicators, and I track this quite often, U.S. large bankruptcies are accelerating. There were 70 U.S. bankruptcy filings in January alone. We'll get the rest of that at the end of February. And so this is pushing a 14-year record high, and they're on the rise. So obviously, that's not a good sign for the overall economy. When you look even closer, Goldman Sachs puts out the Bull Bear Market Indicator. This hits 73%. Which is one of the highest readings in history. And this basically weighs in the different indicators that are looked at to determine whether or not the market is overbought or oversold. And if you look real closely, you'll see that when this number hits at these levels, you see the blue shaded area, that's showing recession. So we don't have any blue right now, and I absolutely believe we are going to start to see the recession kicking in. I think they want to dump that on Donald Trump. I've been saying that, for months on end. And I believe we're on the brink of all that news breaking, the real news, the real economic data coming out. These bits of news right here, we put out through Nod Live. So if any of you would like to get up-to-date and breaking news, all you have to do is scan this code, this Nod Live code, and you'll get a free 15-day membership. It's a very cheap way to get your news. It's I think it's less than $10 a month. Don't quote me on that. Nod is in charge of that one. But he is a machine when it comes to stockpiling the news and putting it out to our members. Now, we're in the final minute of the market right now. I'll get to that after this slide right here. This is one of the most overvalued markets in history, according to the Bank of America analysis team. And you can see here the numbers are very impressive. In fact, if you look at what's happening with the Shiller PE ratio, some of you don't know what that is, but basically the Shiller PE ratio, and there we go with the closing bell. Basically the Shiller PE ratio, it's the current market price divided by the 10-year average of inflation adjusted earnings. So it more or less smooths it out, and that is tracked on this report as well. If you look down below, you can see that even the Warren Buffett indicator is over 100%. To be exact, it's 154.6% over the average. This is the market cap to GDP ratio that Warren Buffett put together. And you can see here that the markets are extremely overbought. So let's get to the news. DIA closing down almost 800 points. And if you did not get a chance to watch my midweek report that goes out every Wednesday, I did talk about the downside in this market long before we had this sell-off on Wednesday, every Wednesday, I should say. After the close, I post a midweek report to YouTube. It's free to the public. You can go check that out. And I did say that I'm keeping my downside target in place for DIA at 425.51. That is still the case. In fact, we might get a little bit of a bounce on Tuesday, but I think we're forming an ABCD pattern right here. I said that last week, that once the pivot formed, we could put an A here. And then once we get a bounce or a pivot to the upside, we would put a B, and then we look for the overall pivot to the downside to create the C, and then that brings us to a lower D. So there's your ABCD pattern. If you're interested in learning more, just stay tuned to this channel because we give out a lot of educational content for free. All you have to do is click on the subscribe button at the top, click the notification bell, and you're set. And I promise you, my goal is to educate the public so that you're learning how to trade this market and learn how to read the signals on the charts. It's not rocket science, but it will take some practice. And again, we teach through repetition because I believe that repetition is the best teacher. Now, looking at IWM, I have a downside target that was hit today right here at 220.23. Look at that volume right there. In fact, I think we're going to go a little bit lower to test the target that I had back here that had already hit at 214.59. So I'm going to put a horizontal line right there. I'll change that after I do this recording to a dotted line. So that downside target is going to continue lower to 214.59 for IWM. Our option traders, by the way, are set up for a downside move in the markets. And we had a really good day today. Our members are crushing it. And again, if you want a free 15-day membership, you can come right on board here. We don't ask for credit cards or any of that stuff. All you have to do is come on over, hit the link in the description box below, and you don't even have to call us to cancel. How about that? You don't need a credit card. You don't have to call us to cancel. If you like to renew, obviously you have to reach out and contact us again, but you don't have to call to cancel. All right, so again, downside target on IWM is going to retest that low right there at 214.59. Looking at the Qs, now to really appreciate this, you have to go back and listen to the midweek report. If you have to listen to it in 1.5 times speed, well, I speak slow enough for you to still be able to understand me at 1.5 times speed, and it'll save yourself a little bit of time. But I did forecast on the Qs. Remember, the midweek report went out on that candle, and I highlighted the spinning tops. Remember that? I highlighted the spinning tops as the point at which we usually find pivot points. And then on that recording, I even forecasted that we would most likely see the pivot point, and I said tomorrow, which was Thursday here. Now that we have that pivot point, look what happened after that pivot point. Volume is screaming, and the price just closed slightly off that low. For the entire day, we had the sellers just coming in. We didn't even get a bounce on the close. So we didn't even get any short covering. It's just continued selling right into the close, big volume. Look down below here, folks. That CCI, which is my favorite indicator, is about to cross the zero line, which is the black line. And I talk about this quite a bit. Once that line crosses, we generally get 2 to 4 more days of downside movement in the direction of the cross, which again is to the downside here. So keep an eye on that. I have my downside target on the Qs still set at 510.16. Now let's look at SPY. Taking a look at the S&P 500 ETF, again, there was the pivot point yesterday. We had a hanging man to boot. We have a close, a big close below that 20-period moving average. We've got the increase in volume on the way down, which if you take out your trading checklist, you'll know that that too is bearish. When the volume is increasing on the way down, it tells us that the sellers are motivated. I have a downside target right here at 590.63 for SPY. And look down below, the oscillators are crossing with a sell signal on the stochastic. And today we crossed below, guess what? The zero line, which is also known as the momentum line. See that little blue bubble to the right? Minus 35.491. We're officially crossed, so therefore I believe the downside momentum is going to continue. Now let's talk a little bit about the VIX, because I did have an extreme upside target up here, which I will keep in place at 27, but look at that candle on the VIX. That target's still in place, by the way. Look at the momentum cross down there on the zero line, and if you recall a couple of weeks ago, I was showing people how I trade the VIX and how our members trade the VIX by using VXX and UVXY. And I had my targets in place for everyone in the world to see at 44.80 right there, which is my target for VXX. Look at the high today. It came in at 44.87. So like a champ, we hit that perfectly. And you have to understand that just a couple of days ago, VXX was trading down around $42. So it's now trading almost $45. So when you look at the percentage of what you can do trading the VIX, then you might understand why these charts are so important. Now, I got to disclaim this. Don't just hop in there and start buying VXX and UVXY because they decay over time, actually. It's a lot harder to play it on the long side than it is to play it on the short side. And so you got to be very careful and make sure you're using risk management techniques and you're following the charts. Now, I'm going to leave you with one little bit of educational content right here. And I talked about this last night with our members, and I was using Walmart as the example. If you go back and search through YouTube, you'll see that I often talk about fan lines and even how to construct the fan lines. But here is the number one rule for trading fan lines. As the fan lines accelerate and go more vertical, so this one here, as I draw that arrow, is or was the most extreme fan line in the sequence of fan lines because the trend is accelerating, going more vertical. It's almost impossible to sustain vertical price action indefinitely. So we're looking for breaks below the fan lines. And the rule is when the most extreme fan line is broken, and you see that happen on Wednesday right here, then there's a 90% chance the price will drop to the next fan line in the sequence. And you can see that that's exactly what happened with Walmart. And a lot of our members had puts on Walmart. So what does that mean for those who don't trade options? Well, if you buy puts, puts go up when the prices of stocks in the market go down. So those members made a good chunk of change in their profits here. And that's what we teach here at Sticky Trades, how to understand the patterns. We talk about strategies. We talk about risk management. Folks, I get so excited about this because no one is teaching it the way we are. And you're not going to find it in any of the high schools or the colleges for the younger folks out there that want to learn how to trade. You can learn it here. I promise you, I will take you by the hand through each webinar that I do, and I will show you the steps on how to trade, particularly how to manage risk. I pound the table on that because if you're not managing risk, then you're gambling. This is calculated risk. Of course, it is risky. You got to know what you're doing. But it's calculated risk, and we're more or less putting the odds in our favor when we look at the charts. Folks, thank you so much for smacking that like button and hitting the notification bell as well. Your comments are welcome. I try my hardest to answer or address every single comment that comes into that box. I take a lot of time doing that throughout the week. I hope you appreciate that. I really enjoyed doing this. I hope you enjoyed watching. Have a great weekend. We'll talk to you next time. So long.
In a world of endless data, where every second counts, introducing Nod Live, your professional compass in the chaos of the stock market. Nod Live cuts through the noise. Stay ahead with Nod Live.